many participants have registered for this webinar, and we already have around 495 participants who are online at the moment. FCRA has always been an interesting topic for the sector. People who are working in the sector as well as professionals who are involved in some form or the other. And today I am in the midst of possibly the best legal minds of the country as far as FCRA law is concerned. A lot has changed. A lot has changed when the amendment came in September 2020, and since then there has been a lot of issues the sector is grappling with. By this webinar, we intend to demystify some of these issues, clarify some of the problems that the sector is facing, and also possibly provide some direction in terms of how should we sail through this this change that has happened that we are all currently facing. So on one hand, there is Corona pandemic, which has completely changed the whole dimension of the world. On the other hand, the sector has to grapple with something like FCRA, which augments the challenge that we all are facing. So without much ado, what I would like to tell you is that this whole webinar would run till up till 7 o'clock. And we will begin with a presentation by Mr. Kejriwal, who would be presenting on 4 sections. So that is going to come, and after each section that he presents, there is going to be discussion around the critical issues that emerges from the presentation, which I would be mainly bringing forth to the panelists to answer them, and in the process also clarify the doubts that participants have. I would also request participants to post their queries in the question and answer box and not in the chat box, because I see in the chat box there are a lot of good evening and the pleasantry messages that are being sent. So it would be difficult for us to keep a track of questions if it comes there. So I would request you to put your questions in the question and answer box. And at the end, for about half an hour, we'll have an open house wherein we will deal with these questions that you have posted. And I'm sure by then, most of the questions you might have had would have been resolved. If not, you please put it in question and answer box, and we will ensure that all these questions are answered before we close this webinar. Now is the time to begin. But before Mr. Kejriwal presents the changes that has happened, the issues that are there in FCRA, I would like to invite Dr. Patra to give an overview of the FCRA law, particularly the amendment that has come in. What are the larger issues that the sector is grappling with? What are some of the operational aspects that the sector is facing? And how do we sail through in this situation? So a brief overview would help the participants to be on the same page. Dr. Patra, over to you.
Thank you so much, and good evening. It's a pleasure to be with all of you. We have about 526 logins and still counting, and maybe many of you are watching us over YouTube. And as we begin, FCRA law. The moment we say FCRA, it generates a lot of interest among people who are affected and impacted by it. And what is that FCRA? Now, FCRA is a very small law. It has got just 50 sections, which is under the Ministry of Home Affairs because it is an internal security legislation. And it only impacts organizations who are seeking some foreign donation or foreign grant, or we call it foreign contribution. So it's a small act, but it has got layers and layers in it. For example, it has got only one office in Delhi. Many things have become online. Good. What is challenging is that once you click submit, you can't change anything. So once it's gone, it's gone. And if you have filed it wrongly, you have filed it. That's it. So it's online, but without any possibility of rectification. We talk about penalties. Penalties are extremely, extremely steep. So once we commit a mistake, you can't really change it. Appeal. Under other laws, income tax law, there are appellate within the law. Here there is no appeal. Appellate is only in the courts, or there is one one small section which talks about revision petition, but that is hardly working well. All that and much more. So what happens is that the act, in the preamble it says it's an act to regulate certain things and to prohibit certain things, with the overarching thing is that any activity detrimental to the national interest and for matters connected therewith or incidental thereto. Now, what the act will regulate, what it will prohibit, I'll leave it to our esteemed colleague, Mr. Suresh Kejriwal, to expound. But this act is to regulate and to prohibit a few things. Now, what are the problems? Problems with this law is that it has got a overlap and overreach. There are certain things which are not in the act or the rules, but sometimes the forms and sometimes the charters, they determine some more compliances. So there are a lot of override or overlaps. Through a public notice, Darpan ID has been made and it mandatory, for example. Intimations have been changed to approvals. When the act it says intimation, but in reality it becomes approval. Compounding offenses come with a notification. And there are certain things which are in the forms. They are even through the forms have become mandatory. So there are rules, the act, the rules, then there are public notices, then there are charters, and then there are forms. So all this together make the compliances very, very complex. Now, on 29th of September, the 9 amendments came in, and that has made life even more difficult. Now, I'm not going to go through all those amendments, neither we are going to go through in this particular session, but there are some key ones which will be presented. For example, the first thing that has impacted many small and medium-sized NGOs is that subgranting has been prohibited. So once the funds are received by one organization, it cannot be transferred to another organization, which has impacted a lot of programs on the ground. And that is something that has had wide ramifications. What happens to ongoing contracts? What happens to contracts which could not be closed? How do we respond to that situation? The second important issue, which is a burning issue today, is the issue of bank account. Now, the amendment made it mandatory for the State Bank of India to be the receiving bank account for all NGOs in Delhi, one particular bank account in Delhi. What happens to other bank accounts? We already had a designated bank account. What shall we do with it? What happens to those utilization bank accounts? How does this whole transaction take place from one account to the other? What happens if we are not able to open the bank account by 30th of June, which was the extended date that was provided? And linked to that is also the FC4 filing, the annual return filing. Those who have not been able to file by 30th of June, what happens to them? Then there is another issue about administrative expenditure, which was allowed with a threshold of 50%. Now it has been reduced to 20%. Now, what is administrative expenditure and what is not administrative expenditure? The whole sector is grappling with it. Rule 5 talks about what is included and what is excluded. However, they are also not very clearly specified. So we are flooded with questions. And how do we reshape and reorganize ourselves? Now, does that mean that yesterday what was being counted as administrative becomes a program today? I think our colleagues and we all together will try to answer that. Then there are suspension proceedings. Once you are suspended, it can go up to a year. There is an inquiry at the time of renewal, and there are many others. There are 9 in total. I'm not going to go into it. But the issue is that we are in a very critical phase of this whole FCRA because the renewal of most of the organizations are coming up. The license is going to expire on 31st of October. I hope that most of the organizations would have filed the renewal applications by now and the annual returns by now. Now, if you have not filed it, probably it's already late, but what shall we do about all those penalties and all that is standing on our head? So all those questions will be answered. I will not stand between you and the presentation that Suresh ji is going to make, but I'm just trying to raise some of the major top lines which we are going to be dealing with in this particular session. So I would stop here and hand it back to my colleague Sandeep and to take it forward from there. Thank you.
Thank you, Dr. Patra. I think that gives a good overview in terms of where we are as far as FCRA is concerned. You mapped some of the larger issues that the sector is currently facing. Without much ado, I would request now Mr. Kejriwal to give the first part of the presentation, which is basically on key concepts and bank account, post which we will take up some of the critical issues that are emerging out of the presentation. Over to Mr. Kejriwal.
Thank you, Sandeep, and good evening to all. Thanks, Sanjay ji, for setting the tone for today's discussion. I shall be dealing with mainly to start with the key provisions under FCRA, the overview of the FCRA, just to have a concept clear what is FCRA all about. And then I will deal mainly with the key amendments. And to start with, I will go with the overview and the bank accounts and followed by panel discussion. And the second part, I will deal with admin cost and the inter-charity donation, followed by panel discussion. And the third session, I will go for FC renewal and FC4 return, and followed by panel discussion. And if the time permits, then we'll take up the other amendments as well. Now, let me start with sharing my presentation. So as I already said, to start with, I shall take the key concepts under FCRA 10 together with the bank account. After that, inter-charity donation and admin cost. After that, FCRA renewal and FC4 return. And if the time permits, we shall also take up other amendments and advisory like chartered for NGO, chartered for chartered accountants, other amendments that includes public servants debarred from receiving FC, Aadhaar of board members, and surrender of FCRA. Now to begin with the overview of the FCRA Act 2010. The coverage under FCRA 10 is, the word person is defined and it includes association, individual, HUF, and Section 8 companies. Meaning thereby, the coverage under FCRA is to a person, and person includes association, individual, HUF, and Section 8 companies. Means even if an individual wants to seek foreign contribution for a certain purpose, certain program, then such individuals should also be covered under FCRA, and he and she should also be registered under FCRA. Then it says it extends whole of India. That means FCRA extends to whole of India. Then it says it applies to every citizen of India, even if it lives outside India. And it applies to associate branches or subsidiaries outside India of a companies and body incorporated in India. That means if any Indian company having a branch outside India, then FCRA also applies to that branch of that Indian company. And again, this FCRA provides exemption, and it says FCRA doesn't apply to statutory bodies who are wholly owned by government and required to have their accounts compulsory audited by CAG. And this notification has came on 30th January 2020. And again, Section 51 says that transaction between Government of India and Government of any other foreign country is also outside the coverage of FCRA Act. So basically, FCRA Act covers to person, it extends to whole of India, and it exempts statutory bodies and the government to government transactions. Now, begin with, we must know what is foreign contribution, because until unless that is for the amount is a foreign contribution, then only FCRA Act applies. So, what is foreign contribution? The first step we have to understand. The foreign contribution is defined as a donation, delivery, or transfer by any foreign source of any article, currency, and security. That means foreign contribution has to be by way of donation, delivery, or transfer by a foreign source. Foreign source is very important, of any article, currency, and security. And if the article, they excludes gift for personal use up to market value of 1 lakh. If any article is received from a foreign source for a personal use, then up to 1 lakh, this is not coming within the definition of foreign contribution. So this is a direct definition of foreign contribution. And it also says that foreign contribution shall include FC from local sources as well. That means the first part was whatever you receive from the foreign source is a foreign contribution. The second part is it also includes FC from local source, and this includes interest accrued on foreign contribution, any other income derived from the foreign contribution, like rent or sale of FC asset, and pass on FC money to another organization. Suppose any FC registered organization is giving money to you, though it is prohibited under Section 7, but if any organization receives that money, it is a foreign contribution in their hand. And the definition of foreign contribution also excludes, and it excludes amount received by way of fees towards cost in lieu of goods and services rendered in the ordinary course of business. That means if you are rendering in the ordinary course of business any sale of goods or any consultancy services, then the amount received will not be deemed to be a foreign contribution. So first is foreign contribution is contribution from a foreign source. Then it is a deemed foreign contribution from the local source, and that it excludes the business-like transaction. Now it is very important for us to understand what is foreign source. The foreign source has been defined and it includes 1 minute, sir. It includes a foreign national if the money is received from a foreign national, organization, association registered outside India, foreign companies, or others. There are a number of lists is given as a foreign source, and basically the person living outside India or association outside India or a foreign government comes within the definition of foreign source. And the foreign source also says what it excludes, and it says Indian company having more than 50% shareholding outside India, and this shareholding is FEMA compliant, then those companies will not be considered as a foreign source. And again, the FCRA Act has given a notification in which they have notified certain sources that though deemed to be a foreign, but will not be considered as a foreign source for the purpose of FCRA Act, like IMF, World Bank, like that 128 organizations of foreign organizations have been notified not to be deemed to be considered as a foreign source. So first we have to understand what is foreign contribution, and foreign contribution, the source is very important and currency is not important. Suppose an NRI living outside India gives you the gives you the donation, then as the money given by the source is Indian, because he's still holding Indian passport, whatever we receive, it is an Indian money, it is not a foreign contribution. But if that Indian NRI becomes an OCI and holds a foreign passport, then he becomes a foreigner, and whatever money we receive from him becomes a foreign contribution, and that falls under the definition of foreign contribution. Secondly, if a foreigner coming to India for a visit and he gives an Indian money to an NGO as a donation, then again the source is foreigner, so that money, though it received in India in Indian currency, will also be considered as foreign contribution. The point I am making is the source is important, not the currency. So first we understand what is foreign contribution. The next step is we have to understand whether all the foreign contributions are regulated under FCRA Act or some of the foreign contributions are regulated under FCRA Act. If we find out this, then we find foreign contribution is deals with the regulation in 3 parts. One is prohibition, second is regulated, and third is not regulated. That means whatever foreign contribution we receive is divided into 3 categories under FCRA Act: prohibition category, regulated category, and non-regulated category. Under prohibition, the Section 3 of FCRA Act says the following person, the listed persons are prohibited to receive foreign contributions, and that listed person includes candidate for election, correspondent, columnist, owner of a printer, judge, government employees, member of a legislature, political party and or its office bearer, organization of a political nature, association or company engaged in production of and broadcast of audio news, correspondent and columnist, and the public servant. So these categories are listed to be prohibited to receive foreign contribution. That means if they cannot register themselves to receive foreign contribution, they are prohibited to receive foreign contribution. The second category is regulated, and it comes if a person receives foreign contribution for a definite program, and definite program is also defined as education, social, culture, religious, and economic. That means if a person receives a foreign contribution for a definite program, then these are regulated. And most of the NGOs comes under this category because we receive fund for a defined purpose, for a definite purposes. And when we receive FCRA for a self-use, suppose your son living abroad is holding a foreign passport and sending money to the father for his self-consumption, then that foreign contribution is not regulated because that is coming for a self-use. So first we understand what is foreign contribution, and then we understand for all foreign contributions are not regulated. Only foreign contributions received for a definite program or definite purposes are being regulated. Now, the third step is what are the compliances if it is regulated? The FCRA says we have to first our registration, we have to register before we receive any foreign contribution. Then once we are registered, we have to follow certain regulations. Then we have to follow certain restrictions. And if we are not following any one of these three things, either registration, regulation, and restriction, then we have to follow the consequences. So basically, FCRA Act has divided the regulatory part into 4 chapters: registration, regulation, restriction, and consequences. When we say registration, then we have the option to register the organization for 5 years. And every 5 years we have to renew. And if we want, we can also surrender the registration. The new section, this new provision has come after September 2020. And the second option is we can get a prior permission, and prior permission is for a specific donor, a specific amount, and a specific project. So registration, we have 2 mechanisms, either registration for 5 years and or a prior permission category. If we go for the registration for 5 years, we have to renew every 5 years, and we can also surrender it. So once we are registered, and we can only after registration or having prior permission we can receive foreign contribution. The next step is we have to regulate. We have to be under regulation. And what regulation says that we have to have a bank account as per section 17. That means SBI account for receiving foreign contribution. Then we can have a second FCRA account. We can have a utilization account. So we have to follow the provisions regarding bank account for section 17. Then we have to follow the section 17 read with rule 11 for the books of account, which says we have to maintain a separate set of books of account for the FCRA. And when they are saying the separate set of books of account, they are saying separate set of books of account for foreign contribution received and records for utilization. That means under the FCRA Act, the only payment is not important. Utilization records are equally very important. And the Act and rules focuses on record of utilization as well, not only payment. Third, the intimation, we have to give quarterly intimation and the yearly intimation. Then we have, the intimation is the yearly intimation, the return. Then we have to file the declaration, and we have to intimate the changes in the board, changes in the address, and all those things we have to intimate. So all these 5 regulations we have to follow once we are registered. What restriction we have to follow? The admin cost has to be 20% of the total amount received. We can't engage in speculative activity. We can't transfer FC to another person, section 7. We have to use the FC money for the purpose for which it is being received, or for the purpose for which we are registered. For example, when we are going for FC registration or renewal, we have to select from the 5 limb, that means education, social, economic, religious, and for whatever purpose we are registered, we have to use FC money only for that purpose. Suppose your registration certificate says you are registered for economic activity, then you can't spend FC money on education. So you have to be very, very particular when we are applying for the renewal to choose the purpose so that your program falls within the specified purpose for which you are registered. And if we are not following these things, either we are not registering and getting foreign contribution, or we are not following regulation, or we are not following restrictions, then we have to face consequences. And it says the suspension proceedings, then cancellation proceedings, and then penalties, prosecution, and compounding. So basically, the overview of the FCRA Act is we have to register first, then we have to regulate, we have to follow restrictions, and we are not doing anything, then we have to face the consequences. The second very, very important things to understand is once we are registered under FCRA Act, the in window is okay, but there is no out window. Because out window is either you are not renewing yourself, or you are surrendering, or your registration has been cancelled. In all these three cases, the current provision says your FC asset will vest with the government, meaning thereby, once you are registered under FCRA Act, and if you want to be outside the FCRA coverage, then either you have to exhaust all the resources you have from the FC fund, or if you want to withdraw from FCRA registration in between, either non-renewing the FCRA registration or by surrendering or by non-compliances, in all the three situations, the FC asset will vest with the government. So in window, though tough but possible, but out window is very, very tough. So once we are registered, we have to always comply with FCRA Act. So this was in short the overview of the FCRA provisions. Now I shall mainly deal with the bank account changes after the FCRA amendments in September. Now there are three layer account. The first layer account is we have to maintain the first account with the SBI account, SBI main branch, New Delhi, and the purpose is that all foreign contributions shall be received through this account. And we have to, once this account is open, we have to intimate the ministry through filing FC6C. And once the ministry gives the approval, we can start transaction from the SBI account. The second layer account, the Act says it is another FCRA account, and that can be maintained in any scheduled bank, which is PFMS compliant of our choice. And the purpose of this bank, another FCRA, is for keeping and utilizing the foreign contribution received in SBI account. And this account also has to be approved by filing FC6C. And the third level account is one or more utilization bank account, which we can open as per our need. And the purpose is for utilization purposes out of the fund received from FCRA account or from another FCRA account. And for existing utilization account, there is no need to intimate further. But if you want to open a new bank account as a utilization account, then we have to intimate through filing FC6D. So whenever the SBI account is being opened and we are submitting FC6C form, without making our existing bank account as another FCRA bank account, then existing bank account becomes outside the record of FCRA Act. And then, so we advise whenever you file SBI account 6C approval, then you also make a simultaneous application to make the existing designated bank account as another FCRA account. So both the account remains in the ministry record, and we can operate from both these accounts. All the existing FCRA registered NGO or NGO having prior permission were allowed to open the bank account by 31st of March 2021 and later extended to 30th June 2021 by a public notice of 18/5/21. That means by now, all the NGO must have the new SBI account with Delhi branch. And once this account is opened, then all the money can be received only through this SBI account, New Delhi branch. Entity can maintain the existing designated bank account as another FCRA account for keeping or utilizing. After opening of the FCRA account, it needs to be approved by the ministry. And after 30th June, if no SBI account is open, then no fresh FC fund can be received by the NGO, though unspent balance lying with them can be used. So now, because already 30th June has been expired, so if all the NGOs which have could not able to open the SBI account, now they cannot receive fresh foreign fund, though they can utilize the foreign fund lying in their existing bank account. Now, it may be noted that the FC income like interest, rent, and sale proceeds are also deemed foreign contribution. However, the amended provision section 17 doesn't distinguish between the foreign contribution received from the foreign source and the deemed foreign contribution as they are generated locally. And therefore, a technical issue arises whether all the foreign contribution, even the deemed foreign contributions, should be deposited in SBI account or it can be deposited in another or utilization bank account also. So this issue was under debate. But recently, a charter has been received from the FCRA department. And if we see that charter, then the FCRA department has clarified this issue by mentioning and by giving examples which transactions can be deposited in which account. And it says donation given in Indian rupee by a foreigner and foreign source has to be deposited in SBI account. That means from a foreign source, whatever received has to be deposited in SBI account. It again says donation received in Indian rupees from a foreign source, even if that source is located in India. So if the source is foreign, though their office is in India, that money should also be deposited in SBI account New Delhi. Then it says FC received in cash and local check through overseas branch transfer in any currency, including Indian rupee from any foreign source, again in SBI. That means if the source is foreign, the money has to be deposited in SBI New Delhi branch only. Again, it says all interest that accrues to FC received in any bank account, including interest on FD, it can be deposited in any bank. That means FCRA bank has 3 sets of bank account, SBI account, another FCRA account, and license bank account. Then the chartered for bank says if you have an FC contribution from a local source by way of interest, then it can be deposited in any branch of the bank. Then if any income is generated in India from the assets created by spending the funds from FC, then this can also be deposited in any of the bank branch. And if the asset is sold or any securities is sold, then it can also be deposited in any branch, any FCRA branch. Meaning thereby, through charter to the bank, the ministry has clarified that the foreign contribution from a foreign source has to be deposited in SBI account, but a deemed foreign contribution from a local source can be deposited in another account, in another FCRA account, or SBI account, or a license account. So these are, in short, the amendment made in regarding to bank account. Now I together with this, I also want to clarify that previously, if we are defaulting, we are not going to report. Now through FC4, we have to report specifically on certain issues. And regarding bank, they are saying any domestic contribution has been created in any FCRA account. That means we have to, while filing FC4 return, we have to specifically say whether any domestic contribution has been created to FCRA account or not. Yes or no. Then we have to specifically say whether association has received any foreign contribution in any account other than registered FCRA account. Then any asset acquired out of foreign contribution has been sold out, and whether sale proceeds have been diverted has not been deposited in FCRA account. So basically, before this amendment in FC4 form, though the mistakes were committed by the organization, but they are not going to report, and it was not coming to the notice of the department. Now, through FC4 form, all the organization under the compulsion, under the obligation to disclose all these things by saying yes or no. And if the answer is yes, then we have to explain the reason for these things. Similarly, when the FD proceeds have been created, whether the FD proceeds have been deposited in FCRA account or not. Now I over to Sandeep for a panel discussion on this issue, so that this issue gets more clarity.
Thank you, Suresh. I think that was a very good presentation, and I am sure it must have clarified, many aspects of the law. Very quickly, I would, I think we've taken quite a lot of time in the first presentation segment itself. So very quickly, I would like to take up some of the issues that are coming under key concepts in bank account, and I would like to bring in Dr. Fogla here. He has not spoken so far. Dr. Fogla, Mr. Kejriwal, while presenting, was saying that donation from NRI is exempted. It is not considered as a foreign source. What if some NRIs form a charity company, say in US, a 501c company, and that charity company wants to give donation in India, whether it will be considered as a foreign source or a local source?
No, this is a common problem. Many NRI associations and mutual groups, they generate money and they send it under the impression that because those NRIs are holding Indian passport, that money received through a collective forum is also an Indian money. But if the money is coming through a 501 charity, for that matter, any entity registered outside the country, then the NRI becomes the source of the source. And the source of the source is not relevant. The immediate source has to be seen, and the immediate source will be the particular 501 society or any other foreign entity. So therefore, it should be treated as foreign source. It should not be treated as a domestic contribution.
Right, I think that clarifies. The second doubt that comes to my mind while Mr. Kejriwal was presenting was with regard to this. He said that Indian companies, if more than 50% of the shareholding are held with foreigners, still it is considered as a local source and not a foreign source. What about subsidiaries of foreign company established in India? Will donation from a subsidiary company be considered as a foreign source or a local source?
In 2016, the Act was amended retrospectively. And retrospectively, since 1976, even the effect was given for transactions under the repealed Act. So now, under the amended provision, the intent of the statute is that any company, because in FCRA law, there are two conceptual definitions which are relevant in this regard. One, a foreign company is defined, and another is foreign source. So the definition of foreign source was amended, and it now includes even a subsidiary of a foreign company as a domestic source. So if you see the definition of foreign source, all companies registered in India, irrespective of shareholding, whether singly or severally. A subsidiary means when more than 50% shares are held by a single entity outside the country. So that's foreign source definition clearly states that whether singly or jointly, if it is held by foreign entity or entities, it should be treated as a domestic source. So for all practical purposes, organization can use this interpretation, and if they want, they can treat it as domestic contribution. But there is another section, foreign company, which still continues in the Act. And foreign company, a subsidiary of a foreign company still continues to be covered under the definition of a foreign company. So somebody wants to take a contrary interpretation, so then a subsidiary to that extent can be argued, because if two options are available in a particular statute, then the SSC or the subject matter of the Act can take the interpretation which goes to its advantage. But our recommendation is that for all practical purposes, any company registered in India can now be taken as local fund.
Right. I think that is very helpful. So your recommendation would be that any subsidiary of a foreign company, if incorporated in India, we should go by the definition of that 50% shareholding and consider that as a local source and not a foreign source, even though the contrary view could also be taken. Dr. Patra, can I bring you here? And Mr. Kejriwal was talking about this SBI bank account. Then he was talking about another FCRA account. Then he was talking about multiple utilization account. What I wanted to know was, is it necessary to open a utilization bank account, and can one not, also spend directly from the SBI bank account, the main SBI bank account? Is it not possible?
So the law, there are two hierarchies or two stories earlier. There was a designated bank account and there was a utilization bank account. So there are two levels. Now a third level has come in, which is the SBI bank account. So there are now three hierarchies in some sense. Now SBI bank account has become mandatory. So all the foreign remittances would first fall in the SBI bank account, and then the second bank account, which was our existing designated bank account, is now called keeping and utilization bank account. And then there is another hierarchy of utilization bank accounts. So technically in the law, while bringing in this SBI bank account, it doesn't prohibit that you cannot spend from there. However, it says that it can be keeping and utilization will be there, and there are utilization bank accounts. So technically it is not prohibited, but it just doesn't say that you utilize. At the same time, it doesn't say that you cannot utilize. So for practical purposes, I think most of the organizations would not like to keep it in SBI and spend it, because they are all spread all across. So practically, I think they would still continue to transfer it to their utilization bank account or keeping an utilization bank account and spend it from there. But if one would insist on spending it from the main designated bank account in SBI, probably there is no prohibition from in that.
Right. So the advice is that even if the organization is based in Delhi, The advice is that to have a utilization bank account and then utilize it from there rather than doing it directly from SBI, even though there is no limitation in the law, as far as utilization from the SBI bank is concerned. Dr. Fogla, Mr. Kejriwal talked about this issue, but still for the benefit of the audience here, this issue of FC income generated out of FC funds, where it should be deposited, the rent or sale of assets or FDs. Does it have to be deposited in SBI main account, or is it possible in other accounts also, even though you talked about the charter, but for the benefit of the audience once more?
As a thumb rule, you should divide foreign contribution into two broad categories. One, foreign contribution, which is received directly from a foreign source, when on the other side, a foreigner is there or a foreign entity is there, or it is coming from overseas. The other foreign source is the deemed foreign source, or a foreign source as a subsequent recipient. So if you sell an asset, now subsequent recipient primarily is not there because inter-charity donation has been prohibited. But other deemed income out of FC assets and all other accretion to the FC fund are also a part of FC. So after the amendment, earlier the understanding was that it should be deposited in the designated bank account. Though there also there was difference of opinion, and we believed that that money can even be kept in cash and spent directly, and it can be a part of FC balance. But now the new the charter which has come, which clarifies that any foreign contribution which is in the nature of deemed foreign contribution, sale of assets, interest income, or maybe other miscellaneous income, can be deposited in any bank account. That is, except the SBI bank account, the utilization bank accounts, and the old designated bank account. But our recommendation would be, it is better to deposit in the old designated bank account. Maybe old designated bank account should be the mother account for utilization purposes, so that way the trail and tracking would be possible. But technically, even if it is deposited in an utilization bank account, that is also permissible.
Right. I think that's a very good advice, that even though it is possible technically by virtue of this charter, but advice is that consider the old designated bank account as the mother utilization bank account, and deposit all those there. Dr. Fogla, for the benefit of those organizations who are wanting to apply for FCRA registration, now there is a requirement of opening of the bank account. So in such case, how many bank account does an organization need to open before they apply for a FCRA registration?
They should open that SBI New Delhi account. So that's one statutory requirement.
So the statutory requirement is just one SBI bank account when you make an application for FCRA registration, and not more. Mr. Kejriwal, you talked about the FC4 part of it, bit of it, as far as bank accounts are concerned. One of the requirements which used to be there earlier was that you need to include a bank statement along with your FC4 state form. And now that there are 3 layers of bank account, how many bank account statement one needs to submit? One organization could have hundreds of bank accounts. Is it possible to submit all of them?
As per our understanding, before the charter for NGO has come, we used to upload only the mother bank account bank statement together with the FC4 return. But the new charter for the NGO registered under FCRA, that says they have to upload all the bank account. Though practically it is not possible to upload all the bank accounts, because in some of the cases the number of bank accounts are much more, not a 1 or 2 or 3 account. But the charter requirement is to upload all the bank accounts. But we understand, and we are still so far followed only uploading the mother bank account through which the foreign contributions are received. Mm-hmm. So the new charter is going to create some confusion in the minds of or in the hands of the NGO to take a call. But if the bank account are more, we advise at least to upload all the bank statements through which foreign contributions are received, maybe from the foreign source or the local source. And we can exclude utilization bank accounts, but the bank accounts which are used to receive foreign contribution, those bank accounts should be uploaded as a part of FC4 return.
Right. So I think in this context, the advice of Dr. Fogla it becomes extremely important when he said that any FC income, please deposit in your keeping an utilization bank account, meaning the old designated bank account, so that when you file your FC4, you can submit two bank account statement. One is of the SBI main account, and another is of the keeping and utilization bank account. If there are hundreds and so many multiple bank accounts, if you have. So that's the advice. I think this is getting very interesting. We are going into the second segment of this presentation, which is an extremely critical aspect of inter-charity donation and administration cost, which is giving sleepless nights to NGOs in India. And Mr. Kejriwal, quickly, if you can explain these aspects, then we will take up discussion under this area also.
Sure, Sandeep. Let me share my presentation. So during this session, I shall be dealing mainly with the inter-charity donation and the admin cost, and what are the amendments being made to these two sections. So section 7 has been amended, and it says no person who is registered and granted a certificate or has obtained a prior permission under this act and receive any foreign contribution shall transfer such contribution to any other person. That means there is a blanket provision to transfer foreign contribution to any other person. So amendment has prohibited transfer of fund to any other person. However, in practice, we find foreign contributions are being transferred when we are going to directly utilize, we are paying to the vendor, the foreign contributions are being transferred to another person. When we are giving assistance to the beneficiary for their self-use, the foreign contribution is being transferred to another person. Again, in some cases, we transfer foreign contribution or community asset to the school or to the community as a flood relief shelter or the toilet block, etc. In some cases, we transfer the FC contribution to an exempt entity like a statutory bodies. Now, the issue is the section 7 prohibits this transfer of foreign contribution, whether it prohibits all the four transfers. As per our understanding, the foreign contributions which result in direct utilization should not be hit by this prohibition, meaning thereby the FC money can be transferred for direct utilization like payment to vendors. It can also be transferred to the beneficiary as a direct transfer for the self-use. But I understand section 7 shall be applicable if the amount is being transferred to an intermediary like a school or community, or if it is transferred to an exempt entity also, though the exempt entity can be exempt from the operation of FCRA Act, but the NGO is governed by section 7 and they are prohibited to transfer FC money to any other person, meaning thereby the exempt entity can take money directly from the foreign source, but the existing FC registered NGO cannot give money to them as per the provision of section 7. The second part is, we understand section 7 of the amended FCRA Act prohibits any type of transfer of FC fund to another person, and therefore even the refund of unutilized balance to sub-guarantee or to mother NGO shall be covered under section 7. That means if the unspent balance is lying with the sub-guarantee at the time the amendment has come, whether the unspent balance can be transferred to the mother NGO, we understand section 7 is hit. Section 7 is applicable, and the sub-grantee cannot transfer unspent balance to the mother NGO. What shall happen if the unspent money can be transferred to the donor NC or not? Now, the donor NCs are defined to be a foreign source under the FCRA separately from the person. So one view is that the money can be refunded back to donor without hitting the section 7. But because of the operational reasons, because how this transfer can be submitted at the time of FC4 return, because this is not a utilization, and in FC4 return there is no other a column for refund of FCRA grant. So normally in practice, even after for transfer or refunding back to the donor, the permission from the ministries are being taken. So we also advise that because of the operational reason, though there is a confusion whether the refund to the donor will require will be hit by section 7 or not, but for operational reason, we should go for the approval from the ministry before we transfer any refund of money to the donor. Now, the second issue has come whether the donor can directly work with the implementing NGOs. We understand if the implementing partners have FCRA registration, the donor NC can directly work with them without any limitation. The second issue is foreign contribution is defined to include donation, delivery, and transfer by a foreign source of article, currency, or security. FC shall also include income of foreign contribution. However, asset acquired out of foreign contribution is shown as utilized and do not form part of the FC balance sheet. That means when the FC contribution is received and you purchase a car, then the car will show as utilized, and that doesn't belong to that, doesn't form part of the closing balance of FCRA Act. So the issue is, and the section 15 and section 22 of the FCRA Act also use the word distinctly foreign contribution and asset acquired out of foreign contribution in two different ways. Now the issue is whether section 7 hit only the foreign contribution and also the asset acquired out of foreign contribution. One of the views is that the section 7 shall apply on the transfer of asset received as a foreign source or the foreign contribution, but may not apply to a transfer of asset acquired out of foreign contribution. Meaning thereby, if you have received a laptop from a foreign source directly, then section 7 may apply. But if you have purchased a laptop out of a foreign contribution, then that laptop you will give to another NGO. Whether section 7 applies or not, this is an issue under debate. And we understand the ministry should clarify this issue to avoid any subjective interpretation. So these are some of the issues under interchange donation. Now we come to admin cost. Now, the section 8 has been amended and which provides a cap of 20% instead of 50% earlier of the admin cost of the fund received during the year. And it says that this cap, at 20% cap, can be increased with the prior approval of the central government. And it also says, and the rule 5 says what shall be included under FCR under admin cost, and it also provides certain exclusions. And there is no change in the rule 5 under the amended FCRA rules. As per amended FCRA rules, organization has to not only report total amount of foreign admin expenses in FC4, but has to declare also whether the expenditure or admin cost exceeds 20% of the foreign contribution or not. And if yes, we have to give the reasons. Meaning thereby, we have to now report in FC4 what is the total quantum of admin cost. In FC4, we have to also declare whether total amount of foreign contribution exceeds 20% or not. So the reporting requirement has become very stricter on this admin cost. Now the issue is how we can calculate the admin cost. The rule 5 says that admin cost shall consist of 8 different components. The first is remuneration and reimbursement of expenses paid to the members of the governing body. Second says the expenses on person for management of the activities, including cost of travel. The word is management of the activities. They are not saying implementation of the activities. So whatever expenses for the person for management of the activities shall be the admin cost. Then they says expenses like electricity, telephone, postal charges, repairs, printing and stationery. Then the cost of accounting and admin funds, the expenses towards running and maintenance of vehicle, cost of writing and filing reports, legal and professional charges, and rent of premises, repairs to premises, and expenses on other utilities. So when we see this list, some are the natural classification and some are the functional hit. Like when say cost of accounting and admin cost, admin fund, that means all the cost of accounting shall be deemed to be a administrative cost. And sometimes they are saying the legal and professional charges. Now the legal and professional charge, they are not linking whether the legal and professional charges are in relation to program or in relation to admin. So these functional and classifications or the natural classifications are not linked to a functional head, then that creates a difficulty. And one of the views is that all the legal and professional charges shall come under the definition of admin cost for the purpose of FCRA Act. Now this FCRA Act also, these rules also provide certain exemptions, and the capital expenditure doesn't form part of the capital expenditure, the admin cost. The exclusion is the first provision of Rule 5 says expenditure incurred on salary and remuneration of person engaged in training or analysis of field data of an association engaged in research or training. That means these salaries will not form part of the admin cost. Second provision says expenses incurred directly in furtherance of the stated objective of the welfare-oriented organization, such as salaries to doctors of hospitals, salaries to teachers of schools, etc. Meaning thereby, second provision says if you are a welfare-oriented organization, then all the expenses incurred directly in furtherance of that objective shall be excluded from a part of the admin cost. Now the issue is which organization shall be called welfare-oriented organization is not defined under the FCRA Act. As per our understanding, if the program has a direct linkage with the beneficiaries, if you are directly working with the beneficiaries, then our program or our organization can be said to be a welfare-oriented organization. But again, this is not defined in the Act, and therefore it is subject to subjective interpretation. And the Rule 5 provides that salary in relation to management of the activities, meaning thereby the person who are engaged in implementation of the program shall not be covered within the admin cost definition. Now, as per the reporting requirement, we have already discussed that FC4 requires a separate reporting for admin cost. And the implication, if we are incurring more than 50%, then we have to pay a penalty of rupees 1 lakh or 5% of the excess expenditure, whichever is higher. And the penalty amount cannot exceed the amount of foreign contribution involved. And it may be noted that an offense once compounded cannot be compounded again within a period of 3 years. That means second and subsequent offense cannot be compounded within a block of 3 years. Meaning in first year, if you incurred more than 20% and you have paid the compounding penalty, that means second, third, and fourth year, you cannot go for compounding. That means your violation continues. So these are in brief some of the changes for admin cost. Now I over to Sandeep for further discussion on this issue.
Yeah, thank you, Mr. Kejriwal. That was brief but very clear. However, I must say that successfully you have created one confusion. And I would like to bring in Dr. Fogla to clarify that, which you always do. You create confusion for Dr. Fogla to clarify. And the issue is that this amendment of Section 7, which prohibits subgranting. And you said that assets assets be transferred. So my question to Dr. Fogla is that does amendment of Section 7 pertain to only foreign funds, or also one cannot transfer FC assets? What is your position on that?
No. First, foreign fund word is nowhere there, because we talk about foreign contribution.
Correct.
And foreign contribution includes currency, securities, and articles. So there is some debate whether article can include assets or not. But anything, the other thing is that a fund is reflected by assets on the asset side. So if you have a fund on the liability side of your balance sheet, then it can be reflected. Section 11(5) of the Income Tax Act allows any kind of investment out of a fund. So one is those assets which have been treated as utilized in your books. Other, those assets which are part of your FC balance. In our opinion, anything which becomes one's FC, whether it bears a accounting value or not, it always remains under FC, and it should be considered as a part of your foreign contribution received or foreign contribution balance available. Therefore, to our understanding, Section 7 will apply. Anything held under FC balance sheet should be covered under Section 7. You are mute.
Yeah, sorry. I said that that's very helpful. It clarifies the transfer of assets out of foreign contribution would also be hit by this amendment under Section 7. Dr. Fogla, another issue which the sector was experiencing or grappling was the project grant agreement which were executed before 29 September when this amendment came in. So since there was an agreement to receive certain funds and the organization was supposed to receive the second part of the installment, for example, after 29 September, and there is already an agreement in place, what will happen to those? Is it not possible to receive them?
So the law will override all bilateral agreements. So all bilateral agreements may suffer force majeure or other contingency clauses which the agreement may have. But the law is very categoric from first, for practical purposes, from 30th September 2020, everything comes to a seizure. There is no transition period which was offered. We were expecting that the lawmakers would provide a transition period, but no transition period was offered. So the law might be arbitrary, but it is a law and it is enacted. It has to be followed. So therefore, no bilateral agreement, no understandings, no movement of fund from one FC registered organization to another FC registered organization under any circumstances, unless it comes under a vendor category or doesn't come under the category, the funds transfer doesn't fall under the definition of foreign contribution. If the recipient is not receiving foreign contribution, he can receive in the capacity of a vendor or some other capacity. All other transfers are prohibited.
Right. In such case, what happens with the unspent fund? Now that the organization is not able to receive more funds to implement the project and there are some balances lying, in any case, the objective of the project cannot be achieved. So what would one do with those unspent funds? Can it be refunded back? Because now that the contract cannot be respected given the change in the law.
So now it is a very important question, and we have been facing this query throughout. One, whether the fund can be refunded by the smaller NGO to the mother NGO. Two, whether the fund can be refunded by a charitable institution NGO, the mother NGO or any NGO back to the donor. And I have been party to many donor contracts where the donor is insisting the money back to be repatriated back to the donor. The general understanding is that, including probably the understanding of the FCRA department, is that money cannot be repatriated, because we have seen in the past people applying under Section 50 for repatriation of grant back to the donor, and FCRA department also giving permission, sometimes denying. But if you carefully read Section 7, there are two conditions which have to be fulfilled for application of Section 7. One, the transfer should be of foreign contribution. Two, the transfer should be to a person. Who is a person? Person as defined under FCRA Act. Now, a foreign donor sitting outside the country, when you are giving the contractual money back to the donor, a foreign donor is not covered under the definition of a person. A foreign donor is covered under the definition of a foreign source. And one entity cannot be simultaneously a foreign source as well as a person, because person is the subject matter of this act, and foreign source and the foreign donor is the source for which the act has been initiated. So technically, in my understanding, this Section 7 would not apply to repatriation of money back to the donor, because it is a contractual transfer. But having said that, the understanding with the department, and in the recent past, some notices have been issued, and we have seen you cannot make yourself immune from departmental clarifications, or you may have to fight it legally. So under the law, there is no problem. Procedurally, better to try to spend the money directly, use it in another project, or use it for future installments of the donor. If those possibilities are there, those should be explored. Repatriation should be the last option, keeping in view the procedural understanding. Legally, it is possible to make. And the second type of repatriation, the smaller NGO or one NGO repatriating it to another NGO, to my understanding, that is not permissible, because for reporting purposes, when you receive a grant or give a grant, including the unspent balance, it is a transfer of inter-charity grant, and it is in the nature both person as well as foreign contribution, both conditions are fulfilled.
Right. I think, thank you very much. That clarifies a lot. One more thing that I would like to ask in this context, or rather two more things. One is that Mr. Kejriwal said that there is no restriction as far as transfer to the end beneficiary is concerned. So in this regard, what should be one careful about when you are transferring, let's say, cash transfer programs that one does, and say that transferring funds to end beneficiaries, whether transferring funds to, let's say, a group or a SHG group and considering them as end beneficiary would stand the test of the law or the test of the transaction?
No, the acid test is that whether the recipient is a custodian or a trustee of the fund or the consumer of the funds. So if the recipient is a legitimate consumer of the fund, then FCRA law will not apply. if the recipient, whether registered or unregistered, is the custodian of the firm. We keep on taking this example, which is a kind of a joke, but it is very relevant to understand FCRA, that if a foreigner comes and gives a 100 rupees to 20 beggars before a temple, then FCRA will not apply. But if the same foreigner gives a 2000 rupees note to one of the beggar and says that distribute it amongst yourself, then FCRA law will apply. Because for 1900 rupees, that particular individual becomes the trustee. So whenever a person, entity, registered organization, unregistered organizations receives money for an onward utilization for a definite purpose, FCRA law will apply. So don't give it to SHGs, informal groups, any entity. You can give reasonable amount directly to the beneficiaries. There you may follow certain trail evidences, Aadhaar, bank transfers, etc. that we are not discussing, but that is the law.
Right, thank you very much. Dr. Patra, Mr. Kejriwal was talking about this FCRA exempt entity. Now, because after this amendment, Section 7 that has come, where it prohibits any kind of subgranting, whether it is possible to transfer FC funds to FCRA exempt entities like government bodies. Is it possible?
Yeah, that's a very interesting question. And I think we get this question very often, that we want to transfer money to government university, for example, or any other government entity or any other entity which is being audited by the CAG, whether we can do that or not. Our position in this is very clear, that subgranting is prohibited to persons. And in any case, earlier also we held the view that the subgranting was only possible to other persons. So now that is not possible, and therefore, in our opinion, earlier also it was not possible to transfer, and now also it is not possible to transfer.
Right. So you are saying even if the entity is exempt under the FCRA law, because of this Section 7, further transferring is not possible. Now that many organizations are looking at different options of working because of the change in the Section 7, this has become a big change. It has had far-reaching implication on the sector. Dr. Fogla, in such case, can mother NPO or the mother NGO, let's say you are referring to mother NGO time and again while you are explaining, can mother NGO give service contract to its erstwhile partners to implement programs, because Section 7 is not permitting subgranting, and Mr. Kejriwal said that consultancy or commercial transactions are outside the purview of FCRA. So can one give a service contract or a commercial contract to NPOs to operate?
Yeah. Before that, just to add to what Sanjay said regarding government bodies, that government bodies themselves might be exempted to receive directly from a foreign source, but receiving from an Indian entity, the Indian entity is not authorized. The government entity is authorized to receive, but the Indian entity is not authorized to give. So that is the challenge. So one side is authorized and one side is not authorized. That is why we are saying that you should take permission before working with government bodies. Now, the service contract is probably the most contentious issue. A service contract can be given to any entity because under income tax law, FCRA law, nothing stops a charitable institution to engage in commercial activities. So that is one part. But the commercial activity for charitable organizations are normally incidental activities, not the primary activity of the organization. One. Two, if the service contract is for utilization of the fund, it is for the utilization of the fund and it is not based on delivery. That way also it is not permissible, because utilization of fund, even if you make it a service contract, it will be treated as a grant contract. So in our opinion, working with an FC registered organization on a service terms primarily would violate FCRA. It will be treated as a camouflaged grant contract, and this is again reaffirmed by the various inquiries, investigations, and even CBI inquiry FCRA department has lodged in the last 5 or 7 years, where in most of the cases where one particular NGO was denied FCRA and it started taking service contract either from the foreign donor or from an Indian organization, and FCRA department has even in some cases has launched criminal investigations. So therefore, unless the organization is reasonably certain that it can establish that it is an incidental activity, it is not a primary activity for which is existing, because primary activity cannot be done with a profit motive or with commercial entity, and it is not a camouflage contract. So it will be, our advice would be to avoid it unless the organization is certain that it can run through the rigors of any inquiry in this context.
Apart from that, I think the organization also is at a risk of GST and even losing 12A if it goes beyond the threshold of 20% of incidental commercial activity. So those risks are also quite pertinent.
Yeah, so one question which is related to this, you said that mother NGO should not or cannot do it through a commercial route, transfer funds to another NGO. What about foreign donor? Can they give a commercial contract to NGOs in India and to implement charitable programs?
This is even more misunderstood, because foreign donor is not under the jurisdiction of the Indian statutes or the authorities. But if a foreign donor is giving a grant to an Indian organization, that means foreign donor is working through a trustee in India. They are not working directly in India. But if a foreign donor is giving a commercial contract to anybody, a consultant or a charitable institution, to implement activity, then if there is no export of services back to the foreign donor, then it will tantamount that the foreign donor is having activity in India.
Right.
And no foreign donor after 1st June 2000, after the enactment of this FEMA, is permitted to have activity in India without having a branch office approval from the RBI. Therefore, I don't think it is permissible for a foreign donor to award implementation contracts where activities are implemented in India on behalf of the foreign donor, because the foreign donor doesn't have the mandate. You may have the mandate, but the foreign donor doesn't have the mandate.
Right. I think that's a very clear advice. So charity cannot be done in the garb of a commercial transaction. The underlying message is very clear from Dr. Fogla. Mr. Kejriwal, you talked about administrative expenses. So I would like to ask you one question which we keep on getting from different NGOs. It is this, it says that 20% limit on foreign contribution received. So administrative expenses cannot be more than 20% out of the foreign contribution received. So will the calculation be based on the foreign contribution received or foreign contribution utilized? What should be the calculation? Because this is leading to a lot of confusion.
Yeah. So far Act is concerned, Section 8 says 20% of the foreign contribution received. Okay. And over a period of time, whatever we spend, received, we spend. So suppose over a span of project period, this 20% we take on the admin or take on collection or take on receipt will not make any difference. But if we calculate on year-to-year wise, and then we take on receipt basis, then it will come with an absurd situation. Suppose, for example, you received your foreign contribution in the month of March, and in that year you have not spent anything. So if the limit is on the receipt, on that to on a year wise, then the first year you have not spent. In the subsequent year when you are spending, you have no thing to spend on admin cost. So I understand this 20% limit should be calculated practically on the expenditure basis, and overall on a project period, on the project cycle, it should be 20% of the receipt on the receipt.
Right. So practically, it means that it is basically on the utilization basis that one needs to calculate, because on receipt basis, practical difficulties are there. Dr. Fogla, one thing that I would like to ask as far as admin expenses is concerned is, Mr. Kejriwal was talking about distinguishing between program and administrative expenses. Now, how will a large organization, for example, where they have program staff, you were talking about management, program management and program implementation. How does one distinguish which is management, which is implementation? So this is giving a lot of headache. Some organizations are also resorting to changing of designations to make it in line to show that it is program implementation staff. But how does one distinguish? It is creating a lot of difficulty.
Now the biggest problem is the way the Rule 5 has been drafted. Rule 5 says that staff which are towards direct implementation of programs are program expenditure, remuneration. But staff for program management, for management of the program, they are admin. So it creates a lot of confusion, because if you say, if an organization is having, say, an animator, then a coordinator, then an officer, then a manager, then maybe a director. So in this hierarchy, technically one can argue that the animator and coordinator are directly attached and everybody else is managing. So the way we create our designation, creates an onus on us. Suppose if you say that there is a program director, then program director has a general manager reporting to him, and the general manager has managers reporting to him, managers have officers, officers have coordinators, then maybe animators. So this hierarchy itself shifts the onus on the organization to establish that all the top 4 or 5 level are not program management, which are directly on. But just imagine, I will take an example. There is a hospital. So there are nurses, there are doctors, there is a chief doctor. So the nurse, doctor, chief doctor, all are program. Even to our common sense, it doesn't. So organization should make effort to change their designation from a military line hierarchy kind of designation to a functional designation. So instead of, which could be actual, we are not suggesting that you should window dress your accounts, but in reality we have found organizations where these people are working together on the program. So if there is an animator who is a livelihood field operator, then there could be a district level livelihood expert. There could be a chief livelihood officer. So if you are using these kind of terms, then the onus will be on the FCRA department to establish that these are admin, because by the terms itself. So therefore they should do some brainstorming and introspection and create your designations more functional in terms of the functions they are doing, rather than the reporting structure they are enjoying. So the reporting structure kind of hierarchy and designation, I think, should be done away with, and we should look for functional and program related hierarchy, so that onus will shift to the FCRA department. We are needlessly creating pressure and baggage on our shoulders by creating this kind of designation. So we can discuss, but we don't have time.
Yes.
At the end, we can take some more questions on this.
Yes, thank you very much. I think that gives still a lot of clarity, in terms of what one should do. Now, let us get into the third segment of this webinar, wherein Mr. Kejriwal is going to talk about this FCRA renewal as well as filing of FC4, post which we'll again come back to the discussion. Over to Mr. Kejriwal.
Thank you, Sandeep. Let me share my So during this session, I shall be briefly touch upon the provisions for FCRA renewal and the key changes in the FC4 annual return. So for FC renewal, the time has already started to submit the return. 3 months have already expired, May, June, July. So what is the preparatory work before we start filing the FC4 renewal form 3CT? All the board members' names should be updated online. The affidavits from the board members should be obtained. The chief functionary name should be updated online. Darpan ID should be taken. Aadhaar number should be updated. The name in Aadhaar and the name in the department website is tallying. SBI account is open, and all the FC4 return up to March 20 is being submitted. So these are the preparatory steps before we start filing up FC3C form for renewal. Now we have to submit this FC3C form within last 6 months before expiry. So if the last expiry date is 31st of October 21, we have to submit our application from 1st May to 31st of October 2021. The filing fees shall be ₹5,000. SBI account has to be open and mentioned in the application. The new amended rule says the inquiry has to be initiated in like with section 12.4, just like for registration. And FC registration, again it says FC registration if ceases on date of expiry, And once it says on date of expiry, no further receipt or utilization. That means if you applied for FCR renewal and by 31st of October you have not received the FC renewal, then from 1st of November, as per Rule 5, even after submitting the FC renewal form, you cannot receive foreign contribution or even cannot utilize. So this is going to create very, very difficult situation for NGO. We have applied in time for FCRA renewal, but which have not, and their FCRA is not renewed by 31st of October. Here our advice is the FCRA Act Section 16 says the ministry has to dispose of the application within 90 days of the submission of the FCRA renewal form. And therefore we understand, though the time limit to file the FC renewal form is 31st of October, but we must file latest by 31st of July, which is today, the FC renewal form, so that we give 90 days time for the ministry to process and submit to renew our application. Again, it says the cases which deemed to be ceased to be seizure of certificate, and it says when we have not applied for FCR renewal or we applied for FCR renewal without submitting the fees, then our registration shall be deemed to have been ceased, and in those cases we cannot receive foreign contribution, we cannot utilize, and all the FC assets shall vest with the government till our FCRA is renewed or we are registered again. So these are all the new provisions, amended rules from November 2010, and it becomes very, very difficult for an NGO which have not applied for FCRA renewal or which have applied for FCRA renewal, but which their FCRA is not renewed up to 31st of October. Now the amended section says the renewal process were on the basis of application submitted earlier, but now it says the inquiry has to be based upon the 12.4 like the inquiry for new registration. So after the amendment, the refusal for renewal can be made if there are violation of FCRA Act or rules. That means we have to comply with various sections of FCRA Act and rules. If you are not following that, then as per section 16.3, our FCRA renewal cannot be granted. And again, we are subject to an inquiry as mentioned in section 12.4. And if we are not satisfying that inquiry, then again our FC4 renewal will not be granted. So when we talk about FCRA compliance, we have already discussed the compliance of section 7, section 8, section 17, and section 18 and section 19. When we say compliance with FCRA rules, then we say calculation of admin cost, quarterly and yearly declaration, maintenance of books of account, yearly intimation, and changes to intimation rule 17. And when we talk about rule 12 for condition satisfaction, then it includes the organization is not fictitious or benami, has not been prosecuted, has not engaged in creating communal tension, has not been found guilty of any mismanagement or misutilization of fund, has not been contravened any of the provisions of the Act, has not been prohibited to accept foreign contribution, has undertaken reasonable activity in the chosen field for the benefit of the section of the people, and its director or office bearer has not been convicted under any other law, and acceptance of FC fund is not likely to prejudicially affect the sovereignty of India. So these are the 12.4 conditions which the department may examine at the time of granting of FCRA renewal. Regarding the key changes in FC4 return, the form has been amended and this amended form has been uploaded even for the financial year 1920. Those amended sections were effective after 29/9/20. That means after the financial year. But this FC4 has been uploaded and same FC4 has to be submitted even for 1920. All receipts should be summarized into social, culture, education, economic, and religious. And clause 8 has been inserted, asking declaration from the reporting NGO, taking yes or no on the 15 compliances issues under FCRA. And it also provides that wherever answer is yes, organization has to provide the details. And again, by public notice of 23/11/20 in relation to FC4, the last date of filing return has been extended to 30th June from 30th 12/20. But again, 30th June has been expired. And as per the department website, we find only 15,078 returns have been submitted out of 22,691 active NGO. That means even today, 1/3 of the NGO has not submitted their FC4 return. So the non-compliances, non-filing of FC4 return will make them subject to penalties ranging from 5% of the FCRA received or 1 lakh, whichever is higher. But again, most of the cases SBI account has not been opened, and what those NGOs shall do, we shall discuss in the plenary sessions. And these 15 declarations basically includes some declaration on the section 7, whether foreign contribution was transferred to any other FCRA organization, any foreign contribution was transferred to any non-FCRA organization, whether any organization or entity not belonging to the association is being managed and financially supported by the association. So all on section 7, they have 3 questions we have to say yes or no. Similarly, on compliance of section 12.4, we have formulated 2 questions. We have to say yes or no. If yes, then we have to give reasons for that. Again, we have to make a specific compliance yes or no on the admin cost and the speculative sections. So basically now, as per the FC4 requirement, we have to give all the compliances a declaration, whether we have followed that or not, by specifically mentioning a yes or no. And if yes, we have to give the reasons for that. So we have to now very, very particular in compliances with the FCRA Act and rules, so that our FCRA remains valid and our FCRA has been renewed. Now, this is over to Sandeep for further discussion.
Yeah, thank you very much. I think so that paints the overall picture as far as filing of renewal and FC4 is concerned. One of the doubt that comes to people's mind was when should one apply for renewal? 6 months before, within 6 months, because there was a lot of confusion when this rule came in. Then there was some notification that came in, which is also not clear. But those who have filed and those who have not filed, Dr. Fogla, what is your advice? What should have been done, or what should one do?
No, the law is very clear. There is no ambiguity. So suppose your certificate is expiring on 31st of October. Then from the date of expiry, 31st of October, the preceding 180 days, you can apply anytime between them. So I think it will be 1st May or whatever. So, but you should, that is the law, that the 6 month preceding the expiry of this certificate is the period in which you should make the application. But organization should make application at least 90 days prior to the expiry, so that you give the time which is available to the department to process your application. At least 90 days time should be given. Otherwise, you will have legal disadvantages in case if it is not renewed. So that is, I think, the provision.
Right. So one thing that I wanted to ask you, all of us or many of us have experienced this during the last renewal time, when application was made on time, but the certificate was not given or the registration was not renewed within the due date. So what happens now that you have applied well within the time, but on 31st October also you don't receive the renewal certificate? What should those organizations do? Can they utilize the existing funds? Can they receive fresh funds? Because it has not been rejected, it has not been cancelled, it is still on hold, it is pending. What should one do?
There could be 2-3 circumstances. One, an organization applies and the certificate is not renewed. One, the organization does not apply, and obviously the certificate is not renewed. And there is another possibility where the organization surrenders the certificate. So now these rules have made it very complicated, but to just in a simple way, if you analyze, if you do not apply, you are in a bigger problem, because the day your certificate date expires, everything comes to a seizure. So if you do not apply on the date when the certificate expires, you cannot utilize, you cannot receive. If you try to surrender, then on the date of acceptance, you cannot receive, you cannot utilize. The only iota of doubt is that if you apply for renewal and within the due date, your certificate is not renewed, then the day the date expires, you don't have a certificate. You don't have a certificate, therefore you cannot receive foreign fund. The popular fear is that one cannot utilize foreign fund, but we don't see anything in the rules of the act which prohibits that an organization cannot utilize. So that is where if an organization, even if it doesn't want to renew, applying makes sense. So these are the 3 brackets. One more thing I would say, that a certificate renewal should always come with a cause, a reason, and there should be some kind of a violation at the end of the organization. if no violation is recorded against the organization, if nothing is heard by the organization, if no show cause has been issued by the organization, then not exactly under FCRA, but in the country, there are many precedences, including from the Supreme Court, that if the authorities do not process your application within the time limit, then it should be treated as a deemed registration. So not that a deemed registration you can claim, but an organization can explore legal options if the show cause or cancellation or any other violation proceedings are not initiated. They should try and claim a status of deemed registration in the absence of show causes. If there are show causes, then they have to face it and see it through.
But what would be your advice? Because 12 under this rule, sub rule 12.5, it says that, whose certificate of registration has ceased to exist shall either receive or utilize foreign contribution until the certificate is renewed. Because 12.5 clearly says that neither you can receive nor utilize once your certificate is, the period is over. So in such circumstances, what would be your advice? Should organization, because this was not the case earlier, before this amendment came in.
To our understanding, this part of FCRA, this cancellation, renewal, surrender, all has been made very draconian. And the intent of the government is that once the certificate is not there, things should vest in the prescribed authority. And in case of a surrender, and in case of a not applying for renewal, the rule clearly specifies that not only the certificate will be seized, the assets will vest in the prescribed authority. In case of a renewal application which is pending, where we are having that whether we have some space or not, that is the only space where there is some leverage and space. So our advice is that if the certificate ceases, then you should neither receive nor utilize. You should explore legal options, maybe deemed registration or other if there are no show causes, because you stand a good ground of getting it restored if you have applied. In any other case, if there is a show cause, you have to face it. If it is a surrender, it will vest it with the authorities. If it is you are not applying it, then also it will vest with the authorities. So that part of the rules are quite draconian, and I think there is not much space for an organization to work once the certificate ceases.
Yeah. So another scenario is, when an organization applies on time, but the renewal is rejected. Let's say the 31st October is the actual validity of the certificate, but somewhere in August, the organization receives a rejection that your renewal has not been granted. Can such organization continue to receive funds till 31st October and also utilize the existing balances lying with them, or will they not be able to do it?
They can, unless that rejection of renewal comes with an additional suspension order. So because even a cancellation proceeding will not stop their operation, because once the cancellation is complete, then only their operations will stop. Or a suspension order is there, then the law provides then that activity can be suspended. They can only use 25%. So if an organization is fortunate to know that its renewal is not renewed prior to the expiry of the certificate, then they should take advantage of those remaining months to utilize the funds or receive the funds, or they can plan accordingly their future course within the parameters of law.
So Dr. Fogla, there is one confusion which I would like to clarify, is that under sub rule 12.6a, it talks about vesting of assets. Now, in such cases where the registration is not renewed, right? It is not renewed, it is rejected. Will it tantamount to vesting of assets to the government or not? Because 12.6a basically says that if you don't apply, or if you apply without fees, in such circumstances, it will be deemed to be seized and assets will be vested with the government. What happens if they don't renew? In case of rejection, will the assets go to the government? Yeah.
No. Sanjay, you are saying something?
Yeah, it is muted.
No. Go ahead, please.
So now the act gives the power to the government to designate the authority who would hold, and the asset will remain vested with that particular authority till the organization again regains the certificate or comes out of the allegations or violations, whatever are. So in that sense, even in the act, there is nothing in the act that the asset will go forever. out of the organization, but the act will be in kind of a seizure. The assets will be in kind of a seizure. That is what has been provided in the act. But for that also, that vesting proceedings should happen. In the past also, these vesting provisions were there, but FCRA department did not invoke those provisions, and the organizations were allowed to continue to use those assets. So these are provisions which are enabling provisions to invoke certain vesting power to the FCRA department, but those should be initiated, and that prescribed authority should be designated by an order under that particular section by the FCRA department. Otherwise, that money will remain with the organization, under the custody of the organization, and maybe status quo should be retained. And it is a complicated issue at that time, because we cannot just handle this issue over a query. Then the organization can explore legal options, which I think they have many legal options, because these acts and these rules are, to my understanding, at many places ultra virus, and they may not stand the scrutiny of the judiciary. So at that stage, those kind of options should be explored and the status quo should be maintained.
Right. So, since we are running short of time, and I see that there are a lot of questions that have come from the participant side, but before that, before I get back to Mr. Kejriwal for the last part of the presentation,
I think Sandeep, we can take up the question answer, because already we are
right. So one question that
sorry to interrupt you, but if you want, we can go on till 7:30 also. That's fine.
Fine, thank you. That would be helpful. So one question, which many organizations are facing, and we are also receiving a lot of queries, is that many organizations could not file FC4 return by 30th June. Now, when they are going to file now, there is a penalty, heavy penalty that is being imposed. Mr. Kejriwal said 5% or 1 lakh, whichever is higher. What should organization do now? Those who have not filed, maybe for genuine reasons, they could not file by 30th June.
No, there is nothing called a genuine reason. So the reason which you can claim that you were sufficiently obstructed, or by maybe a snag in the website, because many organizations did not find their bank account details, etc., coming, and they were not able to file. So if those organizations have, normally you should have tried before say 30th of June. I am told that many organizations on 15th of June, 10th of June, they tried to fill the form, and they were not able to upload because certain snag in the website. So this is a general problem. It should be, cognizance will be taken in general. That part I will discuss. There are some matter pending in Delhi High Court. But standalone, the organization has to put up his case before the FCRA department that they were prevented from filing the FC return due to a snag in the FCRA website. If that is the case, if that is the case, then to my understanding, those organizations will not face the penalty provisions, because everybody is finding huge notices depending on the amount they have received. I get calls from organizations where the penalty is showing 24 lakh. In one organization's case, 68 lakh, and in bigger organization, it could be in crores. So now, let me tell you, in Delhi High Court, this matter was taken up that organizations and thousands of organizations were not able to file this FC4 return before 30th June due to a snag in FCRA department's website. And FCRA department has been asked to explain that, and a time has been given, and maybe in a week's time, Delhi High Court will resolve this issue. We have to wait how FCRA department responds, because the response from FCRA department has been sought from Delhi High Court. And to my understanding, in every likelihood, the FCRA department will either extend the date or will relax the penal provisions. But because this matter is sub judice, and we have to see what explanation FCRA department comes and what evidence says the NGO sector can put before the court that they were actually precluded from filing, because you should remember this is a March 20 return. So it is already 1 year and 15 months. So So in the normal course, a delay cannot be claimed. That there has to be a technical reason. And to my mind, such reasons are already there. And we may very soon hear from the Delhi High Court. Most likely, organization will not be compelled to pay penalty. Let us wait for the court ruling.
Yes, so the advice I think is that those of you who have not filed FC4 till now, maybe wait for the order of the Delhi High Court. Some relief might come in, but nobody knows. So that is there is a possibility. Now, with regard to this FC4 return, which Mr. Kejriwal is presenting, there are a lot of self-declaration items. So the onus is on the organization to say that we have not violated, and by which they have to self-declare. Now, there are some doubts regarding the self-declaration. So one of them is that under this point number 8, point 2, it says that any foreign contribution was transferred to any non-FCRA registered association. Say yes or no. So it is asking whether during the period in the report, any foreign contribution was transferred to any non-FCRA registered association. So does it also include transfer of funds to, let's say, commercial entities, vendors? Does the organization need to declare yes if they have done such transaction?
No. The foreign contribution should be understood in the sense that under the law, whether it is a foreign contribution at the hand of the recipient. So when you pay a vendor or an employee, it is not a foreign contribution at the hands of the recipient. So a foreign contribution, not the foreign contribution balance available with the organization. Where a transaction results in transfer of foreign contribution to any entity, that is what you should declare. So I don't think commercial transaction or any other contractual transfers will be covered here, and an organization can safely say no.
Right. Mr. Kejriwal, I think this under point number 12 of the same, sub point 12 under this 8, this another declaration. It says that sale proceeds of fixed assets has been diverted or has not been deposited in FCRA account. What does FCRA account mean? Does it mean SBI bank account or other FCRA accounts as well? What does it mean?
Actually, FCRA account as per section 17 is only SBI account. But when we see the rule has defined FCRA account separately. And that says FCRA account means all the bank account under section 17. The rule says FCRA account means all the 3 set of bank accounts. Section 17 says FCRA account means only SBI account, because second layer is second FCRA account and third layer is utilization account as per the act. So again, the chartered from the department for the bank, that says any branch of the FCRA account that for the receipt of the FC asset. So I think in these cases, the organization should declare yes, and they should mention in which bank account they have deposited this, whether in the FCRA SBI account or FCRA second FCRA account or utilization account.
So, the question, follow-up question to this is that if I have sold an asset and in cash, so will cash balance, holding cash balance out of sale of FC asset be considered as a violation and needs to be declared here? Can one not hold a cash balance?
I think if you read again that deposit, their word usually deposited in account other than FC money. I think you just read the issue that says deposited in FC bank. If you are selling in cash and holding the cash, I think this doesn't cover under this declaration.
Right. Okay, now in this point number 14 of this same point, there is a declaration which says that whether the organization or entity not belonging to the association is being managed or financially supported by the association. Now there is this declaration one needs to give. In this context, Dr. Fogla, what does this being managed or financially supported mean? I have a couple of questions to ask for the benefit of the audience. So my first question would be that whether a lead or intermediary agency drawing a consultancy contract with the staff personnel of a implementing agency be considered as being managed or supported and therefore warrant declaration.
Now, you have to understand that a staff of an implementing agency is a person who is under a full-time contract with another organization. So independently, a consultant can be hired, and we said generally a consultant can be hired for add-on services, normally not to implement the primary services. That is what our understanding is. Then because it is, there are thousands of types of work, facts and circumstances will differ. So then the application of law will differ accordingly. So one, you cannot contract a staff of another organization and put money through it. Two, consultancy contract, if a staff is implementing the program on your behalf or staff is giving services of implementation, and whether that staff, because FCRA law applies to a individual also. Section 11 says that FC money for implementation purposes given to a person for definite purpose, any person, including an individual. So to my understanding, an existing staff and implementing agency is the last person to whom you should give the contract. Independently, if you are taking services, that person could be a former staff of an implementing organization through a normal procurement process. A staff or anybody, any institution, individual in the normal course can participate in implementation. Not bearing that, you should be careful about working with directly or indirectly with any implementing agency. Otherwise, this clause 14 will apply.
Apply. Now, what if the staff of this implementing agency work as volunteers? Will it still apply if they work as volunteers?
No, if they are working as volunteer, because it is all about money. So if the money is not going out of the organization, I don't think FCRA people will have any problem. Because that will be Indian contribution to a project implemented in India directly by a stakeholder. So in an FC project, any stakeholder can give contribution directly. FC contribution cannot be given through another organization. That is the law. So having volunteers, because there is no transfer of article security or currency to a person, I don't think there is any threat there.
Right. Dr. Patra, does it mean that, in this scenario of this change, that should a lead agency or can a lead agency hire office premise of a erstwhile implementing agency? Will it also come under this declaration, such kind of transaction?
If it is a straightforward commercial transaction like renting a space, commercial space at the prevailing market value, and if there is a rent agreement to support it, I don't think it will come in this whole managing thing. But then if they are placing their office there without adequate consideration and then also get into the joint implementation, etc., then of course all these things would be attracted.
Right. So last question regarding this declaration, Dr. Fogla, is that, so people are looking at different options. So one option is that, lead agency directly procures goods and materials and gives to implementing agency in order to distribute to. In COVID times, a lot of relief work is going on. So is it possible? Will it not warrant declaration under this particular point, that you are procuring goods, giving it to another implementing agency, and they are distributing it to beneficiary?
No. If you procure goods and give it to another agency, it only changes the character of the transaction. It becomes a contribution in cash to contribution in kind. So there is a change in the character, but there is no change in the application of foreign contribution law. You cannot use an intermediary directly or indirectly. So giving materials and asking them to distribute would be giving them material directly. In some circumstances, it may so happen that there is an hospital where COVID patients are there. You may collaborate with that hospital, and that lead agency may directly provide the benefit or the materials to the beneficiary. So that kind of collaborative effort, I think, would be permissible. But using an intermediary agency, even for goods and materials, this declaration will apply, and FCRA law will also apply. And I don't think it is permissible.
During this COVID second wave, a lot of organizations were providing these oxygen concentrators. And I saw some queries also related to this. So is placing of oxygen concentrator in a hospital, let's say, out of foreign funds. Is it permissible? Will it warrant declaration, or is it illegal? What has happened? What has happened?
So technically, FCRA law does not allow it, because you are giving it to a hospital. Hospital is a person, and Section 7 says that you cannot give any foreign contribution, which includes goods also. So technically, but as I said, in a pandemic situation, it is not only a hospital. It is only also a place where legitimate beneficiaries are there. So nobody can stop an organization to access beneficiaries in a particular premises or a particular way, because a sick person is most likely to be found in a hospital. So there is nothing in the FCRA law which says that you cannot go inside a hospital and help a person because the hospital doesn't have FCRA. So through collaborative effort, if you can document that those goods and materials were used, always remained under the ownership of the lead agency and were used for the direct benefit of the beneficiary, even though they were placed in a hospital, I think that should be permissible. But if the ownership is transferred to that particular organization, which hospital, then FCRA law technically would apply. With the FCRA department may not go after such cases, but law is law, I think, so it will apply.
Thank you very much. I think that was very helpful in terms of understanding some of these pressing issues that the sector is facing right now. So before I take up the questions from the participants, a couple of things that I would like to ask, for the benefit of the audience is, one is with regard to this prohibited person. Dr. Patra, you know that this amendment has enlarged the definition of public servant. So is whether a prohibited person, public servants are considered prohibited person. So can a prohibited person be in the board of an organization, of an FCRA registered organization? Is it possible?
Yes, so this also question has come to us many times. And one of the things that prohibited person means the prohibited person cannot receive foreign contribution. Now, whether that person can be on the board of an organization or not. And the first thing that we need to recognize and understand is that this prohibited person, the list is basically people who are employed by the government or hold a statutory authority. Now they have their own service rules which govern. So the first thing that we need to also ensure or see that whether they have been allowed to be on the board of an organization or not. Secondly, this prohibited persons, if they are on the board, they are not direct recipients of foreign contribution. So they are there as part of the governance of the NGO, and that does not disqualify the FCRA holder NGO to receive foreign contribution, and that has been clarified also by the FCRA department in one of the charters. So that is very clear that they can hold that position, but only thing is that you have to ensure that they are not receiving any benefit financially from the organization for being a board member, and whether they have the requisite permission from the government to hold that position.
Right. So thank you very much for that. The other question in this regard is, can foreigners be on the board? This is one question we receive regularly. In the view of the amendment that has come in, or even otherwise, are foreigners permitted to be in the board of an organization?
Right, Manoj?
Yes. No, look, there is nothing in the FCRA Act which stops the foreigners are from the board of the organization, but FCRA through FAQs and other instructions had given some guidelines that the types of foreigners generally FCRA would permit, and they had kept foreigners subject to prior approval. But now with the filing requirements and the renewal requirements, where the foreigners, the board members, without the Aadhaar number of the board member, you are not in a position to file. So it has created a situation where, even though the statute, the act is absolutely enabling, act allows, but the FCRA department through its circulars and etc. Provides certain categories of foreigner which, subject to approval of the FCRA department, will be allowed. But now these new forms and this new compliances have created a situation where a foreigner who is not staying in India. That means a foreigner who is not eligible to get an Aadhaar card for all practical purposes cannot continue on the board of an FC registered organization. So what the act could not do, a form did it. So that is the situation.
Yeah, so last question from my side before I take up the question from the participant. In this charter for auditors, it says that the auditors are obliged to conduct performance as well as forensic audit. Does it not look like an overreach? Because neither in the act or the rule can we find something like this as far as audit is concerned, FCRA audit is concerned. What is your view, Dr. Fogla?
No, look, the conditions which are imposed by authorities, there are in FCRA, we don't have precedents, but in income tax and in other law, for instance, organizations apply for 12-way registration and the commissioner gives a registration, and in the registration certificate, commissioner writes that you will do this, you will do this, you will not dissolve the organization, you will make changes with our permission and all those kind of stuff. So whatever condition imposed by a registering or a regulatory authority, if it is not consistent with the act, it is void. So there are enough case laws, and there are so many high courts which have come in and said that this kind of direction. So I'm very clear in my mind that this charter is legally not sustainable. The authorities cannot direct and instruct a chartered accountant to do a service which is not normally supposed to do or conducts under special circumstances. So I think that is a completely ultra virus FAQ which has been issued, this charter which has been issued by the FCRA department. But it has been issued unless it is challenged. Unless it is challenged, it is a big headache for chartered accountants now to see what additional notes or maybe qualifications or maybe a supplementary report they may have to attach. So that we are in still early days of this implementation of this act. I am sure that some legal clarity will come in times to come.
Yes, so thank you very much for this wonderful panel discussion that we've had. A lot of issues were raised, clarified, and I hope participants have been extremely benefited. I see that there are a lot of questions that have come from the participant side. I will try to take some of them because I hope that many of these queries have already been responded by way of presentation or by way of discussion that we've had so far. So I just request participants once again that when you post a query, just make it brief. Don't write the entire case because we cannot discuss an entire case particular to an organization over here by means of a webinar. What if there are anything particular that you would like to ask generally, then you should ask that. So one is with regard to my panelist can also open the question and answer box. You can see it yourself so that it becomes easier to follow which one I'm referring to. So one was with regard to this maturity of investment. Where should it go? Should it go to SBI? Should it go to old designated FC bank? I think this issue has been clarified already.
Yeah.
That it can be done anywhere, but the advice was to do it on keeping and utilizing account.
Second FCRA account.
Second FCRA account. That was
the old designated account.
Old designated account. So this one, the next question is that the donor is insisting to return unutilized FCRA funds to their bank account. What is the process? The question was asked. I think repatriation of FC funds outside India, Dr. Fogla has very clearly explained the legal position, but also emphasizes the procedural difficulties. But still, Dr. Fogla, quickly, can you just tell them that what could be the way out in such case?
There are two options. If they want to be legally aggressive, I think there is nothing in the FCRA law which stops them. If they want to protect the interest of the organization from the misunderstanding or the difference of opinion which may arise between the FCRA under secretaries or the officers who are handling the cases, then they may write to the FCRA department not seeking a permission under section 50, but seeking a clarification that under section 7 of the FCRA Act does not apply only to a person. Foreign donor is not covered under a person, applies only to transfer of foreign contribution, but foreign donor is taking its own money back. It is not a foreign contribution at the hands of the foreign donor. So the new amendment does not apply. We believe that we are entitled to repatriate. Kindly confirm our understanding. So maybe that kind of a letter, if it is given, even if you don't receive a reply, at least you have some protection that you did some reasonable effort to seek clarification and do some efforts in that regard. But rest the law, you take your own decision.
Right. Mr. Kejriwal, one question is that, because of this merger of banks, the name of the bank and even the IFSC code has changed, even though the account number is the same. In such case, do they need to file FC6 to intimate this change, or is it not necessary? How should one do it?
As per the strict wording of the intimation of changes, they are saying if the bank changes, the nature of the bank changes from the designated bank account to utilization account, if the name of the bank change, of the branches change. So I think whether when the name of the bank changes from PNB to or from OBC to PNB, or from the one branch to another branch, I think in those cases they have to intimate through filing FC6C or FC6A. But when only the account number changes and not the bank and the branch, then I think there is no requirement of intimation.
Right. One question is that by mistake, local currency has been deposited in FCRA account. What should one do? What would you suggest?
In the declaration, you have to say yes in the FC4 declaration.
And is there a compounding of offense possible for this kind of offense?
Yeah. The compounding of offenses now has a number of non-compliance coverage, depositing to a non-FCRA account, receiving without FC registration. All those things have been now come under compounding. But the compounding issue is one compounding, then there is no compounding for 3 years for the same offense. So you can do it once, get it compounded, but in the next 3 years, you can't get it again compounded for the same offense.
Okay, so this one I didn't understand the question much. It says that can an FCRA recipient organization access capacity building organization by paying a professional fee from the capacity building training budget by FCRA grant? So I don't think so there is any such limitation. You can access any capacity building. I think the issue is more about where should such expenses be allocated, whether it is a program expense or an administrative expense. Dr. Fogla, accessing expertise, let's say building capacity with regard to, let's say, a particular program. In such case, such kind of consultancy, will it fall under admin or program? I think that is more the question.
The one, it is permissible. Two, generally it should fall under program, but you have to know whose capacity.
Right.
So now if you are building capacity of designated or established admin staff, so if it is an accountant's training at the headquarters, then you may have to book under administration as well. So you have to see, so you just cannot take a blanket principle that capacity building means program. Generally, it is program, but some due diligence should be exercised before treating it so.
Okay. Yeah, I think that is helpful. So it says that an individual, a foreign donor, wants to contribute his honorarium to be received from an Indian college as a resource person. The money will be transferred by the college from their account. Is this an Indian donation or FC? So basically the case is that a foreigner who is providing some services in the college would pay on his behalf to this organization, whether it should be considered as FC or local contribution. Any one of you would like to answer this?
It will be treated as FC. It's treated as a foreign contribution, and maybe a separate documentation where the direction which was received from the foreigner should be enclosed with the transfer which was given, and it should come to the SBI account of the organization. And maybe the passport detail of the foreigner should also be obtained.
Right. I think this one you have already addressed. It says that more than 51% of the shareholding is with foreigners. What generates income through India? You already explained, it is in any case Indian funds if it is within the FEMA limit. So that is what we have discussed already. Is it possible to keep the old FCRA account with another bank than SBI, or do you have to apply for this account once again? Mr. Kejriwal, one procedural issue. Do they need to open a new, keeping and utilization account, or can they use the existing designated account?
I think they can use the existing designated account as the second FCRA account, as a keeping and utilizing. And the SOP for the bank also clarifies this. And the Form 6C is also allows this to make an existing bank. We have to take a declaration from the existing bank that they are agreeing to change the nature of this account from the designated bank account to the second FCRA account. So together with that letter, we can make the existing designated bank account as a second FCRA account. There is no need to open a new account for that.
Yeah, so one question from my side is that, now because every organizations are applying for FCRA renewal, so if there are change in board members and that has not been intimated to FCRA department, while filing this FCRA renewal form, what should they do? Which name should they, use while filing for the application?
I think for the filing of the application, they have to choose the current names, which are on the present list. Now the issue is the FCRA website shows a different list, and that different list may be from different reasons. Might be earlier to 2020 rules changes, every change in the board was not required to be reported. Only the more than 50% change was required to be reported. So might be in 2016, 17, 18, 1% changes because of no reporting requirement. We have not intimated the ministry. Again, in 2018, a public notice has come where the department has asked all the NGO to update their list of board members. Right. But that was not in the rules and not in the act. So that was in the public notice, and that may have come to the notice of some of the NGO and may not have come to the notice of some of the NGOs. But to my understanding, you have to submit renewal application on the basis of a current list. And if you find some 6E form has been missed from your end to be updated, then you have to apply through a 6E form again also. Because FC renewal is not the updation of board member. It is a renewal form is for the renewing the renewal. So if any 6E form is not missed from your site to be uploaded, then you have to also submit first 6E form, get it updated without wait for the approval, and then you submit your renewal.
Right.
So based upon the individual situation, you have to take a call.
Right. So one question is that, even though it's quite simple, it says, what is the difference between another FCRA account and utilization account? Mr. Kejriwal, you can explain it.
As per the Act, Section 17 says another FCRA account, the purpose is keeping and utilizing. That means you can also hold money for investment. As per the Act, it comes. And utilizing only for utilization. Okay. Meaning thereby, if you want to invest, the investment should come from the second FCRA account.
Now, the next question is that, procurement of equipments, assets, capital expenses, will it be program or admin? Where should they declare in FC4?
The capital expenses are not a part of admin.
So it's neither.
FC4 is also very clear on this. When the reporting, the capital expenses are separate than the admin expenses.
Right. So basically, capital expenses needs to be reported separately, neither admin nor under program. So that's what it says. I think this also we discussed already, refund of security deposit of FC fund, where should one deposit? SBI or utilize an account? We have discussed this already. So this question is that, when you are applying for FCRA registration, it says that, is it mandatory to spend rupees 15 lakh for program activities prior to applying?
Yeah, as per amended rules, one of the conditions for applying for FCRA registration, that the organization must have expenditure of program for 15 lakhs for the last 3 years. That means the organization has to be 3 years old organization, and all the 3 years taken together, the program expenditure should be 15 lakhs or more.
Right. So that's a mandatory requirement as far as new application is concerned. Otherwise, you can apply through prior permission.
And this 15 lakhs for the last 3 years, not for 1 year.
Cumulative. On program activities.
On the program activities.
Right. So the next question is that, what are the consequences if NGO receive funds in old FC bank account before 30th June, even if SBI account was opened in May 2021? Dr. Fogla, Dr. Patra, would like to answer this?
Sanjay?
So now the issue is that the amendment said that till it is opened. So technically, if you strictly go by the Act, it says that the moment the new FCRA SBI bank account is opened, you are not supposed to be receiving in the old account. There have been cases where some remittances have already been sent and it is in transit, and this new account has been opened and it has landed here, Sometimes it has gone back and come here. And in some cases, after the new account has been opened and even activated, they have also received in the existing designated bank account. That is a violation. Definitely, that should not have been received there. But if it was in transit and so on, and if it was 1 or 2 days, probably that could be explained. Even though it's a violation, that they could, if there is a so-cause, then one can explain that this happened during this whole overlap. But if the account was open and activated, and still they have received in the old designated bank account, then that would be considered as a violation.
Dr. Fogla, one interesting question. It asks that can a foreign national wire amount towards puja offering to a temple in a normal bank account? Is it possible?
No.
So there is no such possibility, whether it is for puja offering or not. Huh?
Yeah.
So if income tax refund, shall it be deposited in FC New Delhi branch or any FC utilization account?
No, income tax refund comes under that deemed foreign contribution category. So under the new amended clarification which the FCRA department has given, I don't think it is required to be deposited in the designated SBI account at New Delhi. Maybe the old designated account is the account could be used and given to the income tax department for refunds.
But again, income tax refund may consist of both local fund investment and the FC fund investment. So it is not only the FC investment income tax refund. So in those cases, the advice would be to get it deposited in the local fund bank account, local fund, and then the foreign fund can be transferred from the local to the FC second FCRA. Because this is the mixing we can't avoid, because the local refund check will come one only, combining the FC and local.
Right. Mr. Kejriwal, one question is that this quarterly return that they have to file, or the quarterly receipt detail that the organizations have to provide, do they also account for the interest amount or only the foreign funds that they have received?
I think basically only the foreign contribution received from outside the foreign source, not the local source contribution.
What is the procedure to close utilization bank account? Many organizations ask this question. Is there a procedure to close a utilization bank account?
Not under FCRA, and that's why the FCRA website is always coming with the numbers of utilization bank account, because there is no process to upload the closure form for utilization bank account. Even we send through email, but there is not taken note of. So this is there is no legal process for closure, but we advise that an intimation should be given to the ministry that this utilization account has been closed and no longer a utilization account.
I think many of these questions have already been answered, so therefore I don't think we need to take it up unless we have opened a utilization account in local SBI. Do we have to get it approved and how? Yes, you have to. Which form it is? Within 15 days? 6D.
6D.
6D needs to be filed if you have opened a new utilization account. Within 15 days, you need to intimate by filing form 6D. Okay. I mean, panelists can also pick up questions if you think anyone.
One more, the question was whether the FC fund can be invested in perpetual bond.
So yes, what would be
So as per my understanding, perpetual bond of the SBI, once we invest, you will get the interest, but there is no refund of the money amount invested. If that being the case, then that comes under the definition of speculative activity, because your investment amount goes. So from the FC fund, the investing in perpetual bonds, I think may cover under speculative activity, because your principal amount goes. You are only entitled to get the interest. And then the price of the bond determined by the market forces. It can be more, it can be less, depending upon the market rate of interest in that particular time.
I think most of these questions have been already answered. So this one question is with regard to withdrawal from bank. What is, because there is a lot of confusion regarding this. Is the limit for cash transaction 10,000 or is it 2,000 as mentioned in the charter for NGOs? What is the limit for cash transaction as far as FCRA Act is concerned, or the department's position is concerned? Because there is a lot of confusion and we keep getting such queries. I think this issue of withdrawal from bank of rupees 2,000 in a single day is also related to that.
Even today, the do's and don'ts on the website of FCRA gives a limit of 2,000 cash payment, not withdrawal. And then another do's and don'ts, they talk about use of ATM and etc. But for withdrawal, I think the suggestion is that as per the organization should avoid withdrawing large amounts in cash. I don't think there is a specific limit requirement. But for expenditure, there was a circular, I think in 2014 or 16, which gave a limit of 20,000 rupees under FCRA. And the do's and don'ts talk about 2,000. But our advice would be that under income tax law, this cash payment should be within 10,000 rupees. So that limit should be followed by the organization. 2,000 limit, I think is not relevant because there are two contradicting 20,000 and 2,000.
That's corrected in the charter. In the charter, they have now set 20,000.
Yes.
But Income Tax Act anyway doesn't allow more than 10,000.
So you should follow 10,000.
Okay, so one question is, can a donor in a project directly disburse to small NGOs instead of disbursing to the main NGO, but the accounting and auditing will still be done by the main NGO? Is this kind of an arrangement, looks possible, Dr. Fogla?
No, now here there is nothing under FCRA which stops a donor to give funds directly to multiple small NGOs. Now the only issue here is that is the mother NGO becoming an accountant? So whether it will be implementing the program, whether it will become a legal holder of the program, or it will give an add-on services. To my understanding, making a program and making the mother NGO the lead organization, then it may come under that FC declaration, directly, indirectly managing fund with other FC registered organization. That should be avoided. But if you can create a clear-cut mandate of various institutions, including a mother NGO, maybe you should avoid, after the amendment, you should avoid the terminology mother NGO, because that concept is dead as far as FCRA law is concerned. So if you have the mindset that there is a mother NGO who would be used in a particular manner, all are equal NGOs, they may have different function, and those function in conjunction with what we discussed regarding commercial activity, commercial contracts, and whether that accounting services is as additional services, consulting services, or grant services. Keeping those things in mind, there is nothing in under FCRA law which stops donor giving fund to various NGOs at the same time.
Right. I think one question is that, with this payment to governing body member is considered as admin expense as far as Rule 5 is concerned. The question is that if a governing body member receives remuneration under a research grant, whether still it will be regarded as admin expense or a program expense.
It should not be regarded as an admin expenses. It will be regarded as a program expenses. So when you receive money for being a governing member without any additional services rendered, then only it will be treated as admin. But independently, whether you are a governing member or not a governing member, if you are rendering program services, then it will be a program expense.
Right. So there are a couple of questions with regard to this 20% limit, because the amendment came in September, 29 September. What about the preceding period, April to September, whether still, what should be the basis of calculation, 50% or 20%?
No, up to September, it is 50%, and post September, it is 20%. But if you claim to a 50% before September, then it will become extremely difficult for you to justify how it came down to 20% suddenly along with the law. So therefore, better to have consistency and try to see if it is possible that it is less than 20% all across.
Yeah, so I think most of the questions we have answered. Last question, maybe with this we'll close, is that does payment from FC funds to college university towards tuition fees of students would be prohibited because of this Section 7 amendment, or will it be allowed? Paying school fees of students directly to college or a school out of FC funds.
It will be allowed. It will be allowed, provided otherwise you have documentation of the students, how they were identified and how they are beneficiaries and how you are supporting. So Section 7 will not be attracted.
And the receipts in such cases are also in the name of the individual students given by the college or the school.
Right. So I think with this, we should be at the end of this webinar, which was, I assume, extremely